Hey everybody, this is Jim at SP500chart.com. It's about 4:15 on February 4th, 2014. Let me read this to you, then we'll look at the chart. www.sp500chart.com and this video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. Let's take a look. You know, as I was reading that little disclaimer at the beginning of the video, I just kind of reminded me just a little bit about how we have to put a disclaimer on everything, and it is rumored that somewhere there was a ladder, a step ladder, that had a label on it that said not for internal use. So, that aside, let me show you something here. At least for today, we bounced at right at an area where two things took place. We'd been drawing these lines of varying angles from this top starting point up here, but I left this one because that's where we came down to yesterday, and then we snapped this line because, and only because, it was parallel to this one. We've seen the markets have this real tendency to trade in parallel channels, and this line really was speculative, just like this line was speculative. Okay, so we had a top line that we knew we could pretty much count on because we had 1, 2, 3 solid tags on this line, and each time the S&P sold off. But yesterday when we put this on the chart, that's all we had was the low of the 27th. But we put it there anyway. And again, this line has a little bit more history, but not much more. If you'll recall, if we go back to a 2-hour chart, I believe that gets it done. Well, no, we've got to go to a 4-hour. We have a touch here in June, another touch in October, and we stayed above that line all the way until it was tagged at yesterday's low. Well, there it is. Now the question becomes, does that mean we are going to firm up and we're going to overcome what appears to be potentially some selling pressure built up in a head and shoulders top that has this little short shoulder? Can this longer term line of support overcome the breaking of this resistance line and this support line and this support line? With that in mind, we now would expect both of these to put up a fight, that it should be quite difficult for the S&P to get over both this level at about 1771, 1772, as well as this rising trend line. But I think I've got something on the chart to help us kind of figure out where we might be setting up a reversal to head back up. And you're looking at it right now. It's pretty basic. It's our parallel channel. So I'm thinking we'll extend this line on down here, and whenever the S&P has the strength to get over this line, whether it's tomorrow, Thursday, or Friday, or whether it's 2 weeks from now when we're around 1700, I think I'm pretty comfortable putting this line on the chart as an indicator that the selling is done with, and we are now in the process of reversing back up. And guys, this market has not wanted to stay down for very long. So I'm still inclined, despite the fact that we made that double top at about 1850, I'm still inclined to say, you know, I don't want to say this can't be done. because I think it can be done. So let's just keep an eye on it. I remind you, this little diamond pattern, we got our downside target done with as far as this target, the target from this small pattern goes. If we are really serious about this being a head and shoulders top, then we've got a ways yet to go. As a matter of fact, we got a target of roughly 1698 from this top. So as far as today goes, we got a fairly expected bounce. You'll remember we looked at, I think, a 2-minute chart yesterday, and I just made kind of the offhand remark that it just looks like the way this was trading down and getting really tight, that it looked like it was time for at least some kind of bounce. And lo and behold, we did get that. Now, to be frank, the action in the latter part of the day was a bit, what's the word I'm looking for? A little non-committal. We really stayed over 1750 from about probably, this looks like it's probably 11 o'clock or so, 11, I don't know what time it was, but stayed over 1750, but kind of kept coming down to test it. So, yeah, you know, it's a little bit nip and tuck right now, and that doesn't surprise me. If we see this channel work true to form and true to the way most channels work, then we should, I think, get a tag on this top line at some point. If that were to happen, let's say tomorrow near the close, we need to be aware of the fact that we've got a real cluster of resistance right here that will likely be quite challenging, to say the least. Right there it is. What we've got is we have our neckline of this quasimoto, if you will, head and shoulders. We have this red line right here, which was our resistance line that got broken out. You remember this was over 3 tops earlier in 2013. We got over that, but then we did come back under it. So now this should have flipped back to resistance. And then, of course, we've got our descending trend line right here. So this looks like this area right here would be about as close to impenetrable as one could expect to see, just by virtue of the fact that there are 3 trend lines. Oh, and we've got our turquoise line, but I remind you that's kind of a fuzzy line. It's not as discrete or as specific as these other 3. But you can see 1770, 1772, thereabouts. Looks like that will be a tough thing to overcome. If it can be overcome, then it is certainly a testament to the strength of this market. And guys, I want to say something. I mean, we've talked about the potential that we're near a top, but one thing I want to remind you, I still don't really see the psychology of a top. And that is, nobody's feeling great. Nobody's feeling like the economy's hitting on all 8 cylinders. The jobless reports are weak. Labor participation is weak. Manufacturing is weak. Housing prices have slid a bit. So nothing is good. And so it makes sense for the market to slide down in the face of bad news. But typically, tops come about when it seems as if things couldn't possibly get any better. So guys, let's just go into tomorrow realizing we may get support on this line. Could get tested again. If this line gives way, then we probably should get support on this channel line. So I'm just kind of thinking, let's watch the channels and see what happens with this channel. And again, remind you that this is also a channel, this with our top line up here. So, you know, wouldn't it be great if we could get over all this stuff, could climb back over this double top neckline and power on up to 1880? That would be wonderful. But, you know, one thing at a time. And right now, this 1772, 1780-ish area right in here is going to be, I think, the tough nut to crack before the S&P can really get on much further. But if we do break over this blue line, that would certainly, I think, signal a willingness for the S&P to give it a good go and try for some gains, which would be a welcome relief here in 2014. Real quickly, let's take a look at the Dow Industrials chart. I mentioned, I think it was yesterday or over the weekend, I believe it was yesterday, that this is the index that really gives me the most concern. So we may watch this a little bit more going forward, but you can see we are by a very small margin, really just a little bit underneath this long-term support line. Now, to be fair, we are using a point back in March of 2009 as our starting point. If we were to forget about that just for a little bit and use this low back in the middle of 2011 and adjust our line down just a little bit so that this low and this low in October of 2012 line up, then you see that these three areas touch exactly. It is when we extend this back to here and then try to make it line up that things look very, very precarious for the Dow Industrials. With that said, let's err on the side of not setting up something that we might overreact to. So I'm going to move that line right there. So we'll know that if this line gets taken out by a technically significant margin, then the Dow Industrials look to be maybe in a little trouble. So guys, there's your video for February 4th, 2014. Thank you for taking time out of your day to watch this. Thank you for your support at SP500chart.com. And let's see what we get served up with tomorrow. Take care.